10-year note yields ended the session moving higher, closing back above 4.25. But early in the session, we saw yields moving lower after a story from former New York Federal Reserve President Bill Dudley said that the Fed perhaps needs to abandon its higher for longer theme and move now to look to cut rates sooner rather than later. We saw yields across the board move lower, but as the day progressed, we saw 10-year note yields moving higher while those short-end yields stayed lower, ultimately seeing yields move higher after a weaker demand for today's $70 billion 5-year auction took yields to the highs of the session, closing higher on the day by about 2 basis points at around 426. The big news was the yield curve, the 2s-10s curve, which has been inverted for quite some time, got to as high as -14. That's nearly touching the highs that we saw back in October of 2023. So as those shorter term yields remained lower, we saw the back end of the curve see yields move higher, and again saw that yield curve steepen. Again, seeing 10-year note yields close north of 4.25 today, up a couple of basis points from yesterday's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that as yields were moving higher today, volatility was higher as well as the steepening yield curve, both of those helping to push volatility higher. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we got our in-the-moment look at the job market via the claims number. We'll also get our first look at second quarter GDP via the advanced GDP data. We'll also get durable goods and a 7-year auction, so a full slate of data. No Fed speakers, they are still in their blackout ahead of next week's July FOMC meeting. So 10-year note yields move lower in the morning, then rally higher in the afternoon, closing north of 4.25 ahead of tomorrow's claims, GDP, durable goods, and 7-year auction.